Good morning, everyone. Well, with many trading centers closed Friday and many in Europe closed today as well, trading is light and the dollar is little changed in early European trading Monday. It was higher against the yen, the Canadian dollar, and the New Zealand dollar, and also a few emerging market currencies. Otherwise, it was basically less than 0.1% different from Friday morning's levels. I'd expect to see a similar lack of movement during the European day, at least until U.S. trading begins. The main change, such as it was in the yen, which weakened on news of a wider than expected trade deficit in March, as exports barely grew while imports soared. The small growth in exports compared with February could be just a function of the rise in the consumption tax, which boosted domestic demand in March. Some companies may have diverted shipments to the domestic market rather than overseas. But overall, the data show why I expect the yen to continue to weaken over the medium term. As you should know, a country's current account balance is ultimately the difference between its savings and its investment. Prime Minister Abe's program is lowering the country's savings because prices are rising, but salaries aren't, so people have to save less. Investment, on the other hand, will have to continue to increase in order to make up for the decline in the workforce as the country ages. So, in my view, the result is likely to be further contraction in the current account surplus, probably eventually shifting it into a deficit, at which point the yen will be in serious trouble. The Canadian dollar also weakened despite Friday's news of a higher than expected inflation rate in March. While the news initially triggered some CAD buying, it quickly ran its course and the currency weakened. The Bank of Canada governor has said he will dismiss faster inflation this year as temporary because of slack in the economy. So, at least for now, higher inflation numbers are only going to mean lower Canadian real yields and therefore weaken the currency. The news calendar is quite light today. In the U.S., the Conference Board leading index for March is estimated to have accelerated to plus 0.7% month-on-month from plus 0.5% month-on-month in February. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.